Good morning, everybody. Happy Thanksgiving. I'm Charting Man Dan, trader and mentor and technical analyst educator. In this video, we're going to check in on the broader market with a half day remaining in the week. We have the bulls keeping their complete control. I'll let you know a couple guidelines that let us know when something is shifting, and also a new recent IPO that I'm liking for the setups and the volatility. So I like simple statements and simple guides, and we can look at the S&P 500 futures chart and the 4-hour EMA 12, which is held as support for an entire week plus. I know I'm repeating myself here, but again, we just want to keep it simple. And on Wednesday, nope, that was Tuesday, pulled back, held it, and then again holding it now. And so I'm watching for the possibility that this is a rising wedge on the 4-hour time frame. I don't have high conviction that it is at this point, but certainly aware that that's possible. Keeping in mind that if this were to be a rising wedge that broke bear, we would just zoom out and scout a daily high or low. And with the holiday and trading hours here, that might just invalidate this pattern just as far as, time trading sideways. But if we lose 4-hour EMA 12, we're going to zoom out and we're going to scout a daily high or low with tons of space for it to form. The simple statement on SPY is going to be if bulls hold 448.12, that they have absolute complete control. And that's a dinky little pivot there, but we have no other clear support levels nearby. So that is the one that we're going to be looking at in terms of the next daily consolidation. The NASDAQ is very similar. Again, same thing with the bull break starting to lack a little bit of follow through, starting to show a bit of exhaustion, and watching the potential for that rising wedge. If it breaks bear, we look to QQQ. Again, anything above 383.56 is a daily high or low, keeping the bulls in complete control. And if we do start daily consolidation, we're going to be looking for the response to first hourly oversold conditions. When's the last time QQQ has seen hourly oversold? It has not happened since the low. Futures, the NASDAQ, NQ, and ES, they did see hourly oversold conditions, and that marked the last daily high or low. So we'll be watching when SPY and QQQ get there for the first time. Does that mark a daily high or low for continued confidence in the daily trend, or is it something different? SMH. So semiconductors failed to break the all-time high on Wednesday and are still in daily consolidation at this point. And you can see on the hourly here, viewing it almost as just an equilibrium, a tightening range. And same thing, we haven't hit first hourly oversold conditions. We did in extended hours on the NVDA earnings reaction. But again, I'm watching for the reaction for the first time we get there, looking for a daily high or low. And that's where the back burners give us information. If hourly oversold marks a daily high or low, we know that the dip buying is aggressive and the bulls are still extremely strong. If we get an hourly oversold bounce that then results in a lower low, that tells us that the bulls are losing some of their mojo. So again, just looking at clues in the market, that's one of the clues that I look for. I don't only look for the back burners to play those bounces, which I certainly do very often in strong trending markets, but I look for them for information about the market or the instrument as a whole. Tesla, very clear bearish weakness, bearish correlation on Wednesday. So we broke the high of Tuesday, but only did so by about 40 cents and then just dropped all morning. And you could just see very glaring weakness. You look at the NASDAQ, and the NASDAQ dropped on the morning as well, but it set its low of the day at 10:15. And Tesla at 10:15 was nearing a low, put in a temporary bottom, but then another low, and then just really nothing but sideways while the broader market bounced. And just to go back to the broader market real quick, again, one thing is defending support. And I call it a sucker punch. When you have a trending market, whether it's a clear uptrend or downtrend, you oftentimes get these fast, quick moves in the opposing direction of the trend. And I call that the sucker punch, where it surprises. The bulls get complacent. They've had complete control. And, we start the morning strong. And it's just only up. And then the bears surprise us. Aha, here we are. Big drop down. 1% plus drop in 30 minutes. So that's the sucker punch. And why I use that as the analogy is once the bears sucker punch the bulls, you take a step back and you're stunned. And while you're stunned, the price is dropping. And then you get your wits about you. Okay, we're ready to fight now. And the bulls are ready to fight. And then once that initial wave of momentum stops, if you don't hit a new low after that, That's the bulls continuing to win. And we just have a lot of examples of that. You know, even you look at the S&P 500 futures chart here on the NVDA earnings reaction. So the NVDA earnings reaction, we had the low of the day at that point, and then after hours, everything drops, and the bulls defend the low of the day and V-shape bounce off of it. And so you get that sucker punch down on that drop, bulls defend support, and the bears don't follow through. We then had it again. It happened pre-market on Wednesday. We had some data, and you could see at that point in time, pre-market, this is just a tiny example, it's not meaningful, but a little support level for the 15-minute higher low. And so let's zoom into that, and we see that we had an initial, here's the reaction, drop right down to the 15-minute support. We hold it by less than a point and then head back up. And then, again, the sucker punch 2 times on regular trading hours, Thursday, Wednesday. I'm getting my days mixed up with the holiday. So we had that on the morning, and it's okay. Bears are showing us something. Can they confirm trends? Can they confirm continuation? Can we confirm a 15-minute downtrend as the result of the next bounce? Because again, if you're just imagining a boxing match where they get sucker punched and now they're ready to fight, and then the Bears keep winning, that shows us a sustained control by the Bears. But if you can't confirm the 15-minute downtrend, if you can't confirm the hourly downtrend, Bears aren't going anywhere. And it was, again, back here in the afternoon. There's your sucker punch right down to the low of the day. Bulls defend support, no follow through. Didn't even confirm a 5-minute downtrend as a result of that drop. So just be aware that this is very common in markets. It happened in the bear market. I have vivid memories of a year ago when the Bears would control everything, but on the morning, we would open, we would pop higher the first 5 to 10 minutes, straight up, 1 minute, 2 minute stair step, straight up, and then no follow through, and that would mark the high of the day. The Bears control the rest of the day from there. And we're seeing it in the opposite direction. The Bears make a push on the morning, they get no follow through, the Bulls defend support, they keep full control. So that's what's going on in the market. And just make note that when you get that hard drop, say, all right, I'm paying attention now. I'm scouting a lower high as the most likely scenario. But if we do not see a new low of the day, Bears don't prove anything. A sucker punch doesn't prove enough. You've got to follow through and win the fight after the Bulls are then ready to fight. It's a bit longer than I anticipated, but keep that analogy in your mind. So Tesla's going to be looking for an hourly lower high to be the result of the next bounce, but it's a nice tightening daily range. And again, in this market, it's very easy to be uncomfortable looking long, especially on names like Netflix and things that have, run just straight up. But there are tightening ranges out there, and Tesla is now a tightening range. We got our high where we topped out, our higher low, we fail resistance, and now bulls are looking to hold 226.54 to try and remain within this tightening range. Amazon had a tightening daily range that broke bullish. It was a little equilibrium, a mini one that broke bull on Wednesday. And there are a couple other tightening ranges in IWM and others that we're going to check in on in just a moment. But those are the places to be looking if you don't want to chase the names that are overextended, but the Bears aren't giving us anything to work with, then the tightening ranges are the places to be looking, in my opinion. Just one more note on the 4-hour EMA 12 guide for the futures chart. There are other names that have that as well. Check out Apple's 4-hour EMA 12. We've been holding this for weeks. So every period of consolidation holds it, and it will stand out to us when we lose it. We'll say, okay, this is different for the first time in 2 weeks for Apple's trading. And Netflix as well. Holding it for well over a week. Holding it all of November. And again, in extended hours, we just barely lost it there, but holding it. And so when it is lost for the first time, it will stand out to us. And again, just to reiterate my point, when I keep saying this is a broader market short squeeze, this is very unusual price action. We need to pump the brakes. We need to, not trade this as we've been trading the markets over the last bunch of months. And so one thing to note is, again, I look at Netflix. When's the last time I've seen a macro cap, a major cap stock go up 18 days in a row every single day? I can't remember that ever happening. So again, when I'm talking about unusual price action, It's almost an entire month of trading where we have not broken the low of the previous day at any point. That's an insane amount of just sustained pressure to the upside. So that's just a visualization of what I mean when I say this is unusual price action in the market over the last few weeks. Just had another ChartGuys member log into our account here. So XLV, healthcare. Again, rotation. We see XLV lagging and being one of the weaker major sector bounces on this move. And then the last 3 days, this week, it's standing out as one of the strongest. We can see that over the last 3 days, healthcare is up 2.4%, and we compare that to XLF, which has been leading the way with the NASDAQ. It's much stronger, but the last 3 days, we're only up less than 1%. So we're just seeing the names that have been leading take a bit of a breather, slowing down, and the names that have been lagging getting their move up to, again, it's just a game of leapfrog to try and keep this move going. So XLV, we'll look for the daily uptrend to remain our guide. 131.92 is the next major resistance level, and I'll be doing a long-term time frame video sometime in the next week talking about the 2-month equilibrium that is trying to set a higher low. XLF, again, daily stair-step pattern, 3, 6, 10 days in a row. When's the last time that XLF has seen a daily stair-step pattern 10 days in a row? It's been years. I found one that had 9 sometime in the last 3 years, but as far as 10, I don't know. I stopped looking. I don't care enough. But it's been a long time. It's unusual. So we're going to watch 35.15 support on Friday and say if that level holds, the bulls keep complete control. When we lose it, we're going to look for a daily higher low, and we're going to watch the response to first hourly oversold conditions to see if it acts as a back burner with bulls aggressively buying that dip. IWM tightening daily range, another one to be watching very closely until it breaks. High, higher low, lower high, higher low. Resistance of 179.65, support of 178.51. If this pattern breaks bear, we zoom out to the weekly and we look for a weekly higher low, knowing we have not confirmed a weekly uptrend at this point, and that will have to happen if we're going to have confidence in a longer term bottom being set. So keeping a close eye on this tightening range, and of course if we break bull, we're just going to continue watching the daily higher lows as our guide, which are keeping the bulls in full control as long as they remain holding. Other tightening ranges, I believe it's just Jets from our laggard sectors. Nope, Jets got the bull break. Again, watching these rising wedges on these laggard names. XBI had the bull break with no follow through. Just keeping an eye out if it's time for weekly consolidation or not. And same thing for Jets now. That's a bull break with 0 follow through. TAN is the one that's tightening up. So TAN, high, low, lower high, potentially shaping up. So watching to see how this tightening range breaks in the short term. Some of the other laggard sectors that we were watching, ARKK has been a leader. It's trying for another little daily quick bull flag here. So I'd say ARKK is one of the strongest of our laggard sectors. TAN is still the weakest. Jets, middle of the road. IWM, our benchmark. There's one more in there. XBI, no. Yeah. Anyways, TLT. Same thing. If you play this bounce on TLT and my entry signal for the long swing was back here, breaking the daily lower high. Again, it's always so easy in hindsight. We make trading so difficult. I literally entered TLT the first time we confirmed a daily uptrend in 3.5 months. And it's been a green trade the entire time that I've held it because I waited for the clear sign that momentum was shifting. I didn't try and nail the bottom. I just said, all right, show me. When I get a signal on the chart that something is happening for the first time in multiple months that has not happened, I'm going to act on it. And so far more often than not, that follows through. J&J was a swing trade I took earlier this year. It was a stair-step drop with absolute complete bear control for months. And when we broke the stair-step bullish down at 150.67, we get a move of what ended up being 15% plus off those lows. So again, sometimes in hindsight, it's just like, duh. But in the heat of the moment, it's so much harder to just make it that simple. But we're going to watch the daily uptrend to continue to be our guide on TLT. Anything above 88.31 will be a higher low next consolidation. But at this point in time, if you're not a long-term holder, you need to be establishing a take-profit plan because we know we're going to see weekly consolidation because we must confirm a weekly uptrend if we're going to have confidence in a long-term bottom. It's currently a weekly stair-step bounce on a month in a row, and we've got nice space for a weekly trend change attempt, but we know that weekly consolidation will be inevitable. So just keep that in mind if you are holding. My game plan, I've already taken some partial profit, so I'm just sticking my break-even stop loss under 82, and I will hold this position. It's the same mindset for Microsoft. When I bought Microsoft during fear, somewhere back here, my mindset was sell partial into the initial bounce, set a stop at break-even. And if I stop out, whatever, reassess, find another trade. If I don't stop out, I'll hold it for a decade, whatever. And TLT, I'm having the same mindset. If this is a long-term bottom and we're going to put in a reversal back towards, 120 over the next year and a half, I'm just sticking my stop under the low. If that's the low, I just love risk-free. I don't have anything to worry about on this trade. I cannot lose money on this trade. I can only make money unless something drastic happens, but very low probability of that. Recent IPO, ARM. Shout out to ChartGuys members. Again, this is one of the ways that the ChartGuys community benefits me as well. I was not aware of this stock, and we had ChartGuys members vote to request it in one of our member weekend videos. And I was talking about how, if you clear 56.79 here, that's the second best thing to blue sky breakout because there's very limited price action and, it can move. And it was a cup and handle on the daily time frame there, that little bull flag right under the wall of resistance. It was an inverse head and shoulders on the 2-day time frame that we were looking at, condensing it down, and just beautiful follow through. You have to keep in mind that recent IPOs, the nature of the beast is they are less liquid, which means they can get more movement, and that's just because they haven't been around enough for these market makers to establish massive holdings to be on the bid and the ask and to create a significant amount of liquidity. So they go up hard and they drop hard. Got to keep that in mind, but going to continue to keep an eye on ARM. It had a headline, and they were mentioned in NVDA earnings, which definitely helped. And just keeping an eye on it because we know that anything that is near all-time highs warrants extra attention because of the opportunity that is seen when something gets all-time highs. That's why we're watching CCJ and uranium. That's why we're watching gold very closely. And so, if you don't have a position in an ideal world, we tighten up now on ARM for the next, 6 weeks and then get a bull break of a tightening range to go to all-time highs. I have no idea if that's going to shape up. We've had a very strong few days. We're going to look for a daily high or low. We're going to watch for an hourly oversold back burner. But again, the proximity of the all-time highs is definitely worth keeping an eye on. Just go back and look at any of the IPOs, whether it's Meta or whatever that just IPO'd way back when, and it took Meta a lot longer to get there. But once you get that all-time high, Meta was a bear. I can remember the Meta IPO and trading during that time, and it was just a junker. It was, anybody that bought on the IPO is down big, and once that turned around and we hit all-time highs, there was no looking back. It was just massive upside from there. So obviously, I'm not saying ARM is going to do that, but there's the possibility that it could do that. So again, price discovery is a bull's best friend. The dollar, got to be watching very closely here the next week or two. Because if this daily oversold back burner marks a monthly high or low, that's not ideal for crypto bulls, commodity metal bulls, stock market bulls. So what we want to see if you're a bull is a bounce, which is underway, and then drop to a new low. Do not have daily oversold mark a longer term bottom and turn into a daily uptrend. So we'll be watching that closely. Still a daily downtrend at this point. But again, paying a bit more extra attention, especially because I have so much attention on the metals recently. Gold is in a daily uptrend. Technically has not broken resistance. We're still battling around 2000. We've got to get over 2010 to confirm the weekly uptrend. And then we're just 3.5% from all-time highs. And we're in a daily and a weekly uptrend at that point, which obviously would be a good sign. Silver tightening up on the daily. So does not have the daily uptrend yet, but does have the weekly uptrend, so a difference there. And again, we were looking for this weekly inverse head and shoulders, which has confirmed. And the reason we were looking for it is because a 3-month high or low was the most likely scenario. And so now the big question, is this a 3-month inverse head and shoulders? Can silver make a breakout over 24.64 and have a longer term shift in momentum? And the answer is, if gold hits all-time highs, yes, that's absolutely on the table. But I believe Gold would definitely need to be hitting all-time highs if silver is going to be breaking that resistance. But definitely watching closely, and the miners as well. Miners daily uptrend confirmed. GDX has to get over 3016 to confirm its inverse head and shoulders, and GDXJ is stronger and already broke to a weekly higher high, but definitely want to see GDX join in because if GDX doesn't break its resistance, we know GDXJ is not going to go very far for bulls. Oil. So big drop yesterday, big bounce yesterday, and pulling back a bit more now today. 4 hour, viewing it as an equilibrium, pretty much where we came from, the low, lower high. I don't like the clarity. But anyways, it's not as smooth as it could be, but just watching for a tightening range here after that amount of volatility. And the big question is, can the bulls hold the low and shape up their own? The theme of the video is inverse head and shoulders. Can the bulls shape up their own inverse head and shoulders here? And again, I'm still in my XLE short swing. Stop over the high here. Bulls pretty actively bought that dip on Wednesday, but I'll stop out with a nice little win if that level breaks. Otherwise, going to let it keep playing out. So, hope you have a great day off. Half day tomorrow. Not expecting a ton of action. Maybe the bears can start some daily consolidation heading into next week, but they must break the lows of Wednesday if they're going to prove anything to us in the short term. Again, keep an eye out for the first time that we see all major sectors at the lows together. It should be a flashing sign in our brain saying, hey, this hasn't happened this entire bounce.
Got the baby garlic starting to come up.
This is telling us that something is a bit different. Do good things. Thanks.